Hi, everyone. Welcome to Conway Conversations. My name is Carol Bulman, CEO of Jack Conway, and I'll be your host today. We have a really timely and important topic today. The topic is, why is my insurance going up? Whether we're a buyer, a seller who's going to be a buyer, or anyone else, this is a question that's on our mind. And there's a lot of information having to do with this. I've invited 3 experts to help us explain what we're seeing in insurance, what type of opportunities we have, what type of information we need to be armed with, and maybe some ideas for picking and choosing that will help our wallet, but also keep us protected. So I'd like to introduce my 3 guests, starting with Tia Zaferakis. Tia is a top agent in our South Boston office. Tia just celebrated last year, so she's on year 21. She had her 20-year anniversary with Jack Conway last year. Welcome, Tia.
Thank you, Carol, for inviting me to participate in this great topic. Appreciate it.
Thank you. Looking forward to what you have to say. Next, I'd like to welcome James Solimini. James is a senior loan officer with Guaranteed Rate, now known as Rate, our trusted mortgage partner at Jack Conway. James is a very experienced loan officer. Some of you have already heard from here at Conway Conversations. Welcome, James.
Thanks for having me again, Carol.
Thank you. And finally, last but certainly not least, because Larry is our expert on insurance, I'd like to welcome Larry May of Conway Country Insurance in partnership with Walter May Insurance. Larry is owner of Walter May, and we've also had him on here before sharing his expertise, and this is an important topic for us. Thanks, Larry, for being here.
Well, thank you, Carol. Look forward to talking through some insurance issues with you all.
Great. Pretty timely right now with all the storms going on in other parts of the country. We're sort of lucky, very fortunate that in the Northeast that we are not feeling too much of the effects of that. So we're going to start with you, Larry. Can you share with us and the people that are listening some of the challenges that you're seeing in the insurance industry, and why is it all happening right now? What is causing some of this?
Yep, certainly. Well, as we all know, insurance rates are increasing. So if you've got an insurance renewal that's come up, you've got increases. Automobile insurance is a problem for sure. And there's certain pulls. There's been pressures that we feel every day with expenses, including groceries, including medical bills, medical costs, home improvements, materials, and labor costs. It's a big deal. Now, and so insurance is not escaping that. So they're all feeling the same pain. So what happens with the insurance side is, in the event you have home insurance and now you've got increased amount of storms that's happening. I'll give you some statistics about that in a little bit. Again, I mentioned cost of materials, recently talking to builders about doing a home improvement. What used to be $150 a square foot, we all know if you get estimates to do any kind of renovations or whatnot, or even an addition, then it's not unheard of to hear about $400, $500 a square foot. So as you find these expenses that are increasing, certainly that insurance rates have to increase. So insurance companies are feeling the pain. They have a lot of restrictions as to how they can charge for rates. The divisions of insurance in all these different states have different pulls and requirements for these carriers. So if what used to cost $200 a square foot to repair on homeowners and it goes to $500, insurance companies are paying these out because insurance policy is a contract. So even though you think that you only say, it's fine, just repair it as if you want, they're required by the contract to do it by today's costs. So they are feeling a lot of restraints. So, and the other issue is the frequency of claims. So we all know that you've got a lot of unexpected storms that are happening, tornadoes, wildfires, rain, and hail. So if you don't mind, I'm just going to give you a couple of quick statistics. I've talked to Carol about these earlier, and I think they're kind of fun, and I can always send them out later, and I'll read these. So for the last 9 years, we've had a record 9 consecutive years in U.S. experience 10 or more billion-dollar disasters in a year. That is huge. By the 2000s, the average was about 2.3. Now we're in contrast to $28 billion storms in 2023. So think about how insurance companies in the past were able to set their records and set their rates based on what they thought the storm frequencies would be. Now they're unprecedented, and they're going.
So Larry, just to stop you there, because you're right, you did share this with me, and this is a stunning statistic. Yeah. This in itself tells a lot about what's happening as it relates to weather. So you said we went from $9 billion claims or storms,
yes,
right? Storms that it cost $1 billion a map, to now this past year, 28.
In 2023, there was 28.
Okay, so I could make some assumptions on what you think the reasons are, but could you cite some of the things that you think are contributing to some of these enormously expensive storms?
Nice. That's a very good question, because I have it right here. So there were 6,962 hail events last year, 5 major events over $1 billion in losses. So hail is a big deal. 2.6 million acres burned. Over 55,000 fires created air quality and health concerns across the U.S. in 2022. So you'd think sometimes just property is a problem with homeowners insurance, but you've also got health issues because you have some medical issues, some coverage on the homeowner policy as well. And then there was 1,423 tornadoes last year, 16% higher than the 1991 to 2020 average, annual average. So just those alone, just the hail, fire, and tornadoes alone are causing major issues across the country. That's not to say anything about this rain frequency that we can all witness today and yesterday, and what's happening in Charleston, South Carolina, perhaps today, with a record-breaking rainfall. So, not to suggest anything about global warming, but the storm frequencies are changing, right? So as that happens, now you've got damage, okay? So if you have damage, now the insurance companies have to repair. And if they repair, you've got, again, it goes back to cost of materials, cost of labor, overall inflation that we're all experiencing. And then it's called reinsurance, but insurance companies have pulls on how they buy insurance, because they definitely have to buy insurance for everybody. And therefore their costs are increasing, and that therefore they pass it. There's multiple ways that insurance companies can recover from these deficiencies. One way is by increasing the rates. There are other things that insurance companies are trying to do, but one way is increasing the insurance rates.
So I think, Larry, what I feel is really important here is sometimes as human beings, we have the tendency to say, well, maybe the media is hyping some of this. Maybe we've always had these kind of storms and we just didn't realize it. Maybe there were always this many wildfires in California and, some of these horrible things people are going through. But what you're saying is this isn't hype. This is actual. There are statistics that there are more severe storm experience and fires than we had before. And this is causing, obviously, an increase in insurance rates as you think about all the replacement costs.
Yes. And there's also a few other issues. Technology is one of them. AI certainly is one of them. We've all perhaps seen on the news about how companies are using drones these days.
So, Larry, I'm going to interrupt you there and pause on that topic, because that's a really important topic and I don't want it to get lost. Okay. So can we pause on that and come back to that a little bit?
Yes.
Okay. Yep. What I would like to do, Larry, is go over to Tia for a moment and talk about, so we're talking about insurance. We're talking about homeowners insurance. And coming from the basic point of this, Tia, you're a very experienced realtor, and what I know about you is you take pains to explain things to your clients to make sure they understand them, but also the whys behind them. Back us up a little bit. Why is it important to have insurance? Why is it required? Who is requiring it? And also, we talked a little bit about this during the prep time. Cash buyers, why do they need to think about insurance? Because you don't have a mortgage company that's asking them to do that. So that's a big question, but maybe you can pull that apart.
Absolutely. I think it's important that when you're working with a new buyer, even an older buyer who's reassuring themselves or getting new insurance, I think it's important that they understand. And I'm going to talk more about not a personal home, because that's a huge process of an entire insurance package. But when they're buying a condo, the condos have master insurance policies. And a lot of my first-time buyers, there's a disconnect. They think master insurance covers them. So it's very important that you have a knowledgeable agent who is going to guide you through any process. And us at Conway, we know this. I mean, we know this, and we know this in working partnership with Walter May. Master insurance is one thing, homeowners interior insurance is another. And it's very vital that you can explain this in the beginning. When you're first starting with your buyer, that's one of the things you should touch upon, because insurance is vital. And a lot of times they don't think that they need it, but we have to educate them as to the why. It's also very important that they have if they're new buyers, they have an attorney, and that attorney works with like a partner, which is Walter May Insurance, because the condo docs are going to predicate what kind of insurance you have. An insurance company looks at the master policy to even see, number one, did they cover enough insurance? Number two, what does it exact cover? And condos can cover one of two things. It can cover from the walls in your home in, or it can cover from the studs in. So those are two important things that we don't think about. And a first-time buyer, it's not even going to click unless you explain the importance of it. Lastly, is insurance is key because most loans require it. And I'll let James cover that when it's his turn, but it's not something that we say you have to have. You have to have it. And so I think once you can give them the ease and direct them to the right person to guide them in the insurance company, they can give them some options of what type of policies they can have. That makes for a better client, and that makes for a better understanding. But it's very important that they understand master and homeowners are two separate entities. One of the other key items that an insurance company looks for is any improvements that were done. So if you're looking for a new insurance agency, you've already been an owner of something, you need to educate them on what you have done. I think that's important as well. So those are the little takeaways for anyone who's just starting out, who's never had insurance, never bought renter's insurance, and now is an owner of a condo, of the two items that are vital.
Okay, that's great. And a perfect segue to a question I have for James. So James, Tia mentioned that the bank would require insurance. Explain to us, how much insurance does a person have to worry about that number? Like, what does your borrower need to be prepared for to get the appropriate coverage as far as the lender is concerned?
So Tia's talking specifically about condos, and the condos themselves, and her point is 100% right. We have to look at what the master insurance is first. So right off the bat, I would say whether you're buyer's agent, seller's agent, you should be getting the master insurance up front to cover a couple of things, which I'm sure we'll get to. But the master insurance is going to tell us what's required, if anything. So we have the master insurance reviewed. It's going to tell us if it's all-in coverage, which means they do not need their own separate insurance, although a lot of people tend to purchase it anyways. But if it's all-in insurance, that means if there's a loss, all of their contents, so the building itself, the grounds, the contents in their unit are all covered. If it's not, then they're required to get their own HO6 policy, which is a condo policy, like Tia mentioned before. So it just comes down to what's required after reviewing it. But if you don't need it, a lot of people still end up getting it after closing, pay it on their own. It's like a couple $100 a year, and maybe going up, Larry, but get that for the additional coverage just in case there's a loss and other things can be covered on top.
Okay, great. So to clarify, you and Tia just talked quite about insurance on condominiums. So first-time home buyer or second-time home buyer purchases a condominium. And then you've got your master insurance policy, which is the policy that covers the entire building, all the units, right?
Yep. Yep.
And then you have these people will also be looking at an individual policy. For them to know what's covered in their master, who helps them with that? Who
That
reads
would
that
be
policy?
us. That would be us. Oh, well, you could talk to, of course, your insurance. You can talk to Larry's team, but for us, we have it reviewed to see what the coverage is, what it covers.
Okay.
So it's always like Larry mentioned in the past, have it reviewed because it's a contract, so you don't know exactly what is covered, what's not covered 100%. But we look at it, if it says all in, that means all in. You don't need to get anything. But it can be one of three ways. It's the way I've always explained, and we're talking specifically about condos. Single families, multifamilies, those insurances are different. But for a condo building, it can be one of three ways. On the far right, we'll say kind of like the shell coverage is going to be the master insurance always covers the building. It always covers the grounds, liability insurances. If something were to happen on the association, that could just be the shell, meaning nothing else in your unit is covered. So you need to purchase your own HO6 for the unit and the contents. In the middle would be if you could pick the building up and flip it upside down, everything that fell out is not covered. So whatever is permanently affixed is covered. So you think things like appliances and everything that comes with the condo, your contents are not. And then far left would be all in insurance. If there's a loss, everything's covered. Everything that you have on that policy will be covered. So depending on what's covered, and again, I'm going to step on Larry's toes here, but depending on what's covered, we can say you need to purchase additional insurance or not. You don't have to. And that's where we recommend to, of course, get the master insurance reviewed by us, but then talk to their own insurance person or, of course, Larry's team and see what they would recommend.
Okay, so let me just finish up that topic on condominiums. So if anyone listening is looking to purchase a condominium, they've got to get a hold of that master policy. Tia can help them. Their real estate professional can help them how to get that. So can you, James, so can Larry. Someone needs to read that and analyze it that understands what the requirements are. And then they go from there. There's two different types of policies. I love your turn the building upside down. That was excellent. I heard that before.
So the one thing that I like the most is, especially because people out there, everything's expensive. Everyone's looking for the cut rate insurances, and the insurance companies you see advertising the most are usually the worst companies. The ones you don't know about are usually the best. And talking to someone like Larry, where they can explain to you what you need, what you don't need, that's the most important, because you could be getting an awesome rate, but when it comes time for a loss, you're not covered, and you're going to be pretty angry that you don't have the right coverage. So that's why it's important to understand what you need and talk to somebody that's a true professional.
Really, really good advice. That comes down to having that team of trusted advisors that you rely upon and choosing the right people. James, before I leave you at this moment anyway, talk to us. You talked about condos and you said that's different. Let's talk about the single family, the multifamily. What is the lender looking for and why do you need it?
Yeah, so we're always looking at the building, the dwelling coverage. So we always have to have our loan amount covered, but then we have to look at that to make sure there's guaranteed replacement cost. So if the building were to burn down or the house were to burn down, will we have sufficient coverage to rebuild it as is? That's usually the minimum. It's either the loan amount is the bare minimum, but we always want to have replacement cost to be able to rebuild it. That's what it is now, because as Larry mentioned, it's the cost to rebuild now is higher than it's ever been. That's the number one thing that we need just in case there is a loss. For multifamilies, it's a little different because it's now you have tenants, there's rental, there's other liabilities that come into play. If it's a primary residence versus an investment property, those are two different types of policies. So one thing to notice there specifically is if you have any buyers that are buying a primary residence, multifamily, they have their homeowner's policy. If they go to move out, they have to change their insurance, because if they don't, then they don't have coverage. They have to change it to a business owner's policy is what it is compared to a homeowner's policy, because it's no longer their primary residence. So for people that are kind of house hacking, trying to buy a single family with FHA, put down 3.5%, I'm sorry, multifamily, put down 3.5% or 5% conventional, that's fantastic. But if you want to use it as an investment down the road and you go to move out, you have to make sure you have the right insurance coverage.
Okay, so the message there, in case anyone got lost, because that's a lot of really important information, is that there are details there. And again, you've got to be able to ask the questions, listen to people that know what they, about insurance, about the mortgage piece, about the real estate piece. So that's really important. Thank you, James. Tia, I'm going to come back to you for a moment, because James and Larry have talked a lot about the increased price for for any loss and the inflationary pressures, the expenses. So what I think of, and you started your conversation talking about first-time homebuyers. So what I think of is this affecting people's ability to purchase a home? Are you seeing this becoming difficult for buyers? And what type of advice do you give them going into the process?
Thank you, Carol. I don't see it quite yet as a fear factor setting in. It's like, oh my God, another cost. But what I do educate them, because I've done this myself, I'm not the greatest at writing a million checks every month. So I educate them to speak to, and James has done a lot of my recent loans, is that they should try to see if they can incorporate the insurance as part of their loan, so that their insurance and their taxes, for example, are all paid in one lump sum, which is pennies in the big scheme of things to the increase of what the price would be. So to eliminate that fear factor of, oh my God, I have another bill to pay, I try to educate them that they should look at that option with their mortgage broker as an option to make it easy for them. It's paid monthly, and they don't have to worry about a secondary payment out of a checkbook.
You know, I'm so glad that you clarified that for us, because yes, insurance is going up. Mm-hmm. And yes, there are reasons for it. Mm-hmm. And they're affected by big things in our lives, like storms and fires and things we hear about. Mm-hmm. But in the whole scheme of things, when it comes to buying a home, it's a small line item.
Exactly.
And so the key is coverage. Mm-hmm. So yes, it might be a little higher than it used to be as far as your monthly payment goes. But James, Larry, Tia can help with all of that. The most important thing is getting the right coverage, so that you are protected down the line. And what James said was so important, because there are discount companies out there that will give you that rock bottom rate, but what are you getting for it? So that's really important when it comes to insurance.
And Carol, I think Larry can adjust to this, because I just did it. Sometimes if you buy 3 years into the policy, you've locked in for 3 years, you can save some money in doing that as well. But I always reflect on insurance to guide them with that.
Guide you. That's great. Actually, Larry, I do want to come back to you on some of the things that a buyer can be thinking about. Again, they're going to rely on you for your expert advice, but things that they can think about. There's different ways to set up your insurance, right? As far as, you know, Tia had talked about 3 years out, or deductibles and certain coverages. Can you walk us through some of that?
Sure. One thing, I'll start with condos. I'll kind of circle back on things that we had touched on. So the condo association has the declaration of trust. It has those documents. And yes, it suggests what the association is responsible for and what they buy insurance for. So in addition, I always recommend that get what they call certificate of insurance, a proof of insurance from the association. Because even though they know that, yes, the condo doc suggests it's all in, but we still have to understand what the association has decided to buy for insurance, okay? Because the association can go self-insured if they want. So back on the topic of increasing costs from the insurance companies, well, the insurance companies that are insuring the condo master policy, their costs are going up. So sometimes what they do is transfer the cost, small costs, down to the unit owners. So if a new buyer comes in on a condo, they should understand what is the insurance that's being purchased by the association, because what the association may be doing is saying, now I have a $25,000 deductible, or maybe we have a $50,000 deductible, and therefore the unit owners are going to have to buy insurance to take care of that high deductible, which even though it's an all-in, and they don't, and as far as the lenders are concerned, don't necessarily have to buy the insurance. Well, the association is now has this major self-insured limit. So a new home buyer buying a condo, getting a really good deal, yet they may see that they've got to buy an insurance policy that's now going to cost them $600 that would have cost them $200, because they've got to buy that cost of the deductible in there. So it's really important for a new home buyer to understand what they're getting on the condo side, what kind of insurance they have, right? That's very important. And as far as the new home buyers and whatnot on buying single family homes, it's the same kind of thing, to understand what am I buying here, and what will the insurance companies, how will they insure it? Give them a little bit of time to kind of digest what it is that the product that they have. There's a lot of different insurance programs that can be out there, and then mitigating things by high deductibles, different credits and that type of thing. And certainly get into all that.
Okay, so it's a big conversation. And
Yeah.
so it's not something that with a click of a button on your iPad or your iPhone, you're going to be able to get the quote that's right for you, whether it's your budget or your coverage. And I think that's an important point. I mean, this is a process.
Yes, you're right. So there's analytics and technology. There are some insurance companies where you can go in and you literally can put in your date of birth, your address, and now these insurance companies know by the rooftop. So your neighbor can have a different insurance rate than you do. They can know by your rooftop, based on capacities and other things, you could get a rock bottom rate, and you could do it in a day. The best thing to do is allow time to make sure you go through a lot of different insurance companies, because you don't want to just get the rock bottom thing. It's very complicated these days.
So quick is not always better. Tia, you had shared an example of a situation, and it relates to what Larry just said about these drones that are coming, are sent out from insurance companies. Larry, you can tell us a little bit about that. But Tia, you had experience with this. And could you share that? This was a coworker, I believe, that had an experience with this and how it got resolved.
I think recently, and this was national news as well, it was in Massachusetts, and a person had actually a drone check their roof, and they were canceled by their insurer. And they automatically just canceled. This was national, it was on TV. They were canceled because the drone reported that the roof was old, when in fact it was not. So sometimes you can't just go back to your insurer because the policy was canceled, but you do have a 60-day window. And I advise anyone to do some research, seek help outside of the insurance company. And this person did seek help outside, and they were able to prove, and sometimes it might just be, if it's a roof issue, hire a roofer, have them go up, have them write a document of the roof is not old, it's not caving in. In this particular case, she had remedied the roof not too long ago, and she was able to prove that, and then they reinstated her insurance. So just don't take face value because you get that cancellation notice. Always research more. I was fortunate, real quick, I was canceled on a secondary home for an incident that had occurred that was out of my control. Eversource had shut down, power had shut down, my power had gone off for almost 2 days. Thank God we were able to prove that insurance paid for a huge remedy of an entire home because I had a water leak, which I was not aware of. But it came a year later, I was canceled. Nothing you can do. There's always hope. The thing is to fix your home and then get reinsured. And I was able to do that. And I know Larry's laughing because I was so angry, and he had to explain to me these things can happen because of the storms and everything else. They're not taking on a lot of cost. So don't sweat the small stuff. There's always help. There's always guidance. Go to the right people. And if it's something to do with the exterior of your home that they see in a drone and they're not even there, get help by a professional to prove that it's not a bad item, and then try to get reinstated.
I love those two examples, because I'm assuming for the people that are listening, they may have a couple examples like that. By the way, for anyone that's listening, if you have any questions, feel free to put them in the chat for any of our guests here today. But that's an important point, because this is new, right? Mm-hmm. The concept of drones out, checking out rooftops. And I think the message there is, don't panic when you get that cancellation notice. And Larry, when someone gets that cancellation notice, what do you want them to do?
So hopefully they have time on their side. I certainly recommend that if they get it in the mail or however they receive it, act quickly. Mm-hmm. Because it does take a little bit of time. You've got multiple options if you receive this. And Tia, as you were saying, from the drone standpoint, I have a quick example as well. One of our clients was canceled, and they were doing some imagery, one of these carriers, and they did a cancellation because they saw a red tree that was hanging over the corner of the roof. And it was actually a small Japanese maple that was in the corner of the garden. But the way the technology was working at the time, it appeared that it was a big giant tree. So this person had time, called up, says, look, I have a Japanese maple. Why are they doing this? This thing is 5 feet high, you know? So we were able to straighten things up and get the renewal process done. So I want
they got a call, and they got a call fast.
right away. Yeah. And then we can take a look at other options. There's certainly things you can do. And these insurance companies, and you mentioned, Carol, that it's all new, and it is, because just because of all these storms and the frequencies and whatnot, the insurance companies can't afford to be necessarily forward-looking, suggesting like the stock market, if you will. They're very reactionary. So therefore, now they're noticing all these things, but their rates aren't set up they weren't set up just yet for all these things that are coming down the line. It takes them a little bit of time. So now they're really trying hard from a technology standpoint to get out in front of things, and that's why the drones hit. That's why the imagery things are hitting. That's why they're looking at, okay, what do we actually have? Technology now is suggesting and helping these insurance companies understanding they have a house that should be insured for 500,000 and it was insured for 300, just because they haven't had the proper technology to get that done. So new home buyers, for sure, when they're looking at something, looking at a house, if they see overhanging trees or if they see something that might bring up a question, because the insurance companies will inspect all these homes, they should make sure they understand really what they've got. And then as the renewal comes up, it's the same thing. Make sure that you understand, you know, what you have and time. Get with, you know, CCI, Waltham Insurance Agency has all the insurance markets, can certainly take a look and make recommendations based on opportunities.
And Larry, your company is an aggregator, basically, right? So in other words, you're not representing just one insurance company. So if that person that Tia just talked about called with a cancellation notice, you're able to take that information and possibly go to another carrier. Is that correct?
Correct. And what's happening as well, and you really need to have that, because there are some insurance companies that are going through these rate increases and they say, okay, one of the ways they want to help their books is we're not going to insure anything in a particular town or anything in a particular address. And that's what they call capacity. Therefore, they're done. They're not going to insure and they're going to non-renew for that particular house rooftop. Yet a different insurance company might have a different portfolio, and they may have different variables set up from their writing structures and say, we'll insure one Main Street, not a problem. Yet another insurance company won't insure one Main Street. So having a lot of insurance carriers in your portfolio is a real help to the customer.
Okay, yeah, that's important. James, you know, we talked about the qualification part of this, and Tia had commented that she hasn't seen a big effect from her buyers, you know, as a result of some of the changes in her buyers' qualification. What are you seeing from a mortgage perspective? Are you seeing an effect, A? And B, are there certain products that you're seeing affected more by some of the constraints when it comes to the changes with insurance?
Yeah, the biggest thing is going to be insurance premiums right now are significantly higher. So what we used to see as maybe $100 a month for insurance, now it's going to be like 150, 175 for the same house, because of course rising prices, but rising insurance costs and everything we talked about before. That's just for a single family. So that comes down to the qualifying aspect of it, just the monthly payment perspective of having to build that in and make sure we're accounting for the right numbers. If we're just assuming for $100 a month, we get a quote back at 300, that changes the qualification pretty substantially. So on the higher priced homes, I've noticed the largest impact. Like we're getting quotes of $9,000-$10,000 for, you know, for properties that were used to be like $4,500. Now they're a lot more. So we're seeing big changes in people having to really shop around and trying to kind of wheel and deal to get their insurance the way it needs to be. But that's really the biggest thing. Now that's also like coastal, and Larry, you could talk to this. A lot of companies are pulling out of coastal or certain types of properties. Florida has been impacted tremendously by insurance, where insurance carriers are pulling out of Florida. It's all together, so you can't even. It's hard to get insurance. So having a company like that to be able to shop around is super important. But that's the changes. Those are the biggest changes I'm seeing from a premium perspective. From a qualifying perspective, Larry mentioned before about the condos. The condos in the past 12 months or so have been impacted the most by insurance, specifically the master insurance and the per unit deductibles. So what happened recently, there's always been a guideline where the per unit deductible can be no more than 5% of the actual building coverage. So it was always there, but if it was more than that, the guideline would allow us to get that supplemental insurance to cover the loss. So for example, if there was, like Larry mentioned, 25,000 to a 50,000 deductible, you'd have to get that separate HO6 insurance that if there was a loss, that deductible per unit kicked in, call it 50,000, the owner has to have a $50,000 coverage to pay for that deductible. So now their deductible on that would be $500. That pays the 50,000. Everybody wins. But now the way it is, that's really been impacting a lot of transactions is if it's more than 5%, Fannie Mae, Freddie Mac will not allow it. It cannot be more than 5%. And that's been a huge problem. So there are a couple workarounds to it. And also the reason for that is with premiums going up, most of these insurance carriers, and there are a lot of them are catching on now, to keep premiums down, they raised the per unit deductible and said, well, we'll keep the master insurance coverage premium down. We'll keep that, which keeps the HOA dues down. And then maybe they'll have to just get a supplemental insurance cost, but that really doesn't affect them that much. It doesn't, that's an easier impact than us saying we have to increase the dwelling coverage and increase the premium, which is going to increase your HOA dues, and it's going to cause kind of hysteria. So what they didn't know is the change that happened where now increasing that per unit deductible made a large percentage of HOA of condos ineligible for financing for Fannie Mae, Freddie Mac, and there's really few and far between even portfolio lenders that will do it. So the workaround is, what I would suggest at least is if you're selling a condo or you're buying a condo, get the master insurance up front. If you're waiving financing, always have some type of condo language in there for subject to condo building approval if you're getting financing. Even if you're not getting financing, you want to take a look at it, but figure out what that master insurance covers, if it's an eligible insurance policy, because if not, it doesn't matter if you're the most qualified borrower in the world. If the condo is not approved, you're not going to get financing. So that's number one. So if you're selling it, get the master insurance. I'm happy to review it for all of our agents or whoever that wants to have us look at it to see if it's an eligible insurance policy. But if you're buying, also get a copy of it up front so we can look at it and see what we have to do. But the workarounds have been, of course, you can increase the building coverage or you can decrease the per unit deductible, but that involves getting trustees involved and insurance. The master insurance needs to be changed. But we've noticed is if the insurance company will write an endorsement that states that the per unit deductible will not exceed 5%, even if the calculation shows more, we will accept that. That's kind of been the workaround for Fannie, Freddie, and most of our investors. So it's been a big topic. So we went from under 10% of condos in the country being eligible to like 25, 30%. The number keeps rising because of this. And that we're kind of mitigating it as we're trying to catch it up front, but it's been a really big issue.
Boy, that's really tricky. And Tia, I'm going to come to you in a moment because this is a really important point. Again, we're talking about the newness of the insurance industry. We talked about that with drones and some of the things that we're challenged with. But having a condominium, the ability to get insurance for a condominium owner, that's a new experience. And to me, it speaks to how important it is for anyone looking into the condo market. And condos are wonderful. There's a lot of really compelling reasons to purchase a condo, but they've got to be informed and get information up front. Tia, you want to comment on that?
I do. I also want to bring another point out. If you're going into new construction, it's really important you understand that master policy. Because again, it's not, right, Larry? It's not in stone because that's what the contractor has now. And he will eliminate some things on there because he'll let go of that policy. That's a firsthand chance to see if they've covered enough before you close, before the rest of the units close. So as new construction happens, very important at the get-go to understand that policy with your attorney, with your lender, with your insurance company that you're going to insure yourself with from the beginning. I think it's just vital to have knowledge, Carol. I think that's what you're asking. But I also want to tap on, as James had alluded, you may be buying a condo. We'll stay with condos because it's a little different than single family homes. But as an investor, there's two types of investors. There's the local investor who's buying it to rent. You still need insurance and you still need to cover yourself in there, not for the things when you tip it over, the contents, which would be the renter insuring that. And then you have the international insurer. The international insurer is clueless as to the fact these cash buyers that are coming here, they're not informed that they need insurance. So that's part two of that. So knowledge is very vital in how you're educating the buyer, if they are your buyer and they're international, or if they are your buyer and this is their first investment property, it's not where they're going to reside. Very important to do that. But I think you have a lot more to be able to change and craft when it's new construction, because no one has closed yet. So take a look at that insurance binder that they have and make sure it's good, because you can have some leverage with the gentleman who purchased the insurance for the condos.
Okay, great. And you're specifically talking about new construction on condos.
Right.
Okay. You know, you brought up the whole concept of the international buyer, another really important topic. You know, in our listeners, we have a combination of buyers and sellers, and we also have realtors signed on. And any new realtors, it's important to remember you've got to build your team of trusted advisors. You know, you might be hearing some of this and it might be causing some concern, but you want to make sure that you have the trusted advisors, just like your buyers and sellers do. That's really critical. Okay, Larry, I want to come back to that whole drone concept, because that's a really interesting concept that is really brand new. And are there any things that a homeowner should do to prepare? Because a lot of what we're talking about, you even said the insurance industry is a reactionary type of industry. Are there things as a homeowner that we can do to prepare to avoid that cancellation notice coming out?
Well, specifically as it relates to drones, what the insurance companies are looking for is trying to mitigate their claims, right? So they're looking at trees, overhanging trees. They're looking at moss on the roofs. Roofs are a big problem from wind and whatnot. So the uncomfortable part about it is, yeah, I've got this huge pine tree and some of it's hanging over my roof. Well, from a proactive standpoint, really the only way to deal with it is to get it taken care of. That's a big expense. Mm-hmm. Certainly that is one thing. Certainly you can be prepared. And sometimes it's just common maintenance about the house. Mm-hmm. The drone situation we're finding is starting to slow down a little bit. They were very aggressive on the drones. They got a lot of feedback, wasn't good feedback, and therefore that drone stuff is dying down a little bit. However, the technology is not, right? So what you can do as a homeowner to avoid those cancellation notices is really, just kind of really get around the house, do your maintenance, that type of thing, because the inspections are coming, whether it be railings, whether it be loose walkways, whether it be overhanging trees, that type of thing. Mm-hmm. Inspections are coming. If you're selling your home, you should understand that it's coming where inspectors now, whether it be the insurance company or a home buying inspector, they're going to be they're keen on the fact of these are certain things that I'm going to need taken care of. So if you're a seller, you may want to make sure that you get ahead of that a little bit and make sure that if the inspection does come in, that you'll be able to handle that. As a buyer, for sure, you should keep your eye open. Be keen on, hey, look, yep, there are overhanging trees, and that is not going to go away. You will have issues with that. I have the neighborhood next to where I am with very mature oak trees, and it could come from acorns or from hail or whatever. They damage rooftops from time to time. And so therefore, as a buyer, you need to understand that those are sometimes some hidden expenses that will come in. So be very careful about that.
Larry, you mentioned we've been focusing on buyers for the most part in this conversation, but you mentioned our sellers. Tia, are there different messaging that you have for your sellers because of some of the changes that have been affected by storms and prices and some of these technologies that you're preparing your sellers for?
Well, I think even for selling a single family home or a condo, I think it's important that a seller advise you of any updates they've had. I think that is key because one of the things that the team at Walter May is going to ask you as they're insuring you is what updates have been done. Like, when was the roof done? When was the heating system done? When was, the exterior done? The windows. I mean, those things are very important. And that's what your role is when you're selling someone's home, is to understand what all those updates are. Number one, to market the home better. But there's the flip side of how important it is for a buyer to purchase that and get insurance with that. And I think that that's key always. And I think that we have to be top of mind to that when we're talking to sellers. What have you done? Is there anything that could be critical, not just for home inspection, but we also have to remind them about the cost of insurance today. And we have to remind them that this could affect somebody purchasing what kind of insurance and what rates they'd be looking at. So I think it's just important to have more knowledge of what a homeowner has added value to their home.
So it's definitely a change in communication. Larry?
Yeah, I'm sorry, Carol. Tia, that is awesome that you just mentioned that, because the buyer, the first thing that we're asking them, wire, plumbing, heating, roof, that type of thing, we've got to know it, because that's one of the things that's important about establishing different insurance rates.
Mm-hmm.
So one thing, certain things you can do to keep the rates down is to maximize your credits on policies. And knowing what those updates are key. And it's amazing to me that the amount of buyers don't know. So I have no idea about well, go down there and look at the panel and tell us this. You got to get, and sometimes they wait for the inspectors, and even the inspection sometimes doesn't hit really on it. So that is key to know those numbers. It helps on the insurance values, premiums.
Right. And that's an important point too, is we can't rely on our home inspectors, can we, to advise us on these things? I mean, Larry, you're talking about, first of all, from the sales perspective, memory, just remembering what they've done. And Tia, you're going to go through that whole interview, but you can't just say, well, I can't really remember. The home inspector will pick up on that, right? That's the responsibility of the seller.
Yeah.
Yeah.
It is, because you could have two different home inspectors and have two different home inspections. It's just how they view what's there. But the onus is really on the owner of that home. They're the ones that can tell you. They're the ones that know. If they know the panel's not working, well, then you've got to fix the panel before somebody buys that home. If you have areas in your flat roof that need fixing, then you need to get the roofer up there, because it's going to come out and it's going to affect insurance. I think one of the things I wanted to throw out, if I could, and Larry can only advise us on this, I myself have this question, but you've answered it, but do you foresee insurance companies helping people? Because I know two people that have bought generators, and they don't look at it as a generator as something as an enhancement to a home. And so, but it is an enhancement, because it's never going to allow the power to go out, and it's never going to allow issues to happen when there's no power. So maybe if you could hit on that, because I've had clients ask that question. I don't have the answer to that
question.
Yes. So, and some of the high valued home insurers will offer, or ask the question and offer some credits. What I see happening is the state departments, Massachusetts Division of Insurance, and every state's got different divisions. They are now keeping the insurance companies, they restrict them as to the credits that they can offer. So therefore, it's reactionary. So now if an insurance company now says, we got to figure out a way to get these rates down, and we do know from technology and this and that, that a generator will help in preventing some losses, whether it be the frozen pipes or whatnot. And then they go to the Division of Insurance and they said, we need a credit for a generator. Well, that takes a little bit of time to get that through, and it takes multiple requests to get that in. So if the insurance company going in on their 6-month thing for April and it's effective in June, and they get denied, now we're kicking the can for 6 months or a year. So I do see those credits coming in, I would say probably in 2025 for some insurance companies who want the capacity, who have the capacity in certain areas, and they want to try to issue some additional credits to get that insurance, opposed to just non-renewing some of these homes. They'll say, okay, let's figure out a way we can stay on them, but help me get us some claims. And generators is one of the ways, and credits are coming.
So that's progress in a positive way.
I would say yes.
James, you had touched upon briefly, and talking about flood insurance will bring us down to a real rabbit hole, so we won't get into a huge conversation.
I didn't mention that on purpose,
but I feel like it's pouring right now. We got to talk about flood insurance. James, you had talked about flood insurance and some of the coastal communities. So you're a lender, you have customers that have applied for a loan, and next thing you know, you ask for insurance coverage and they may not be able to secure insurance, or it's difficult. What has your experience been with that?
It's really, so the coastal properties, that's even regular insurance, but then you have your flood insurances. The type of loan makes a difference on what type of flood insurance you can get. But right up, when anyone's looking at a property that's coastal and like the Situates or Duxbury's, when they're going to make an offer, part of my pre-approval process is looking up the property to see if it's in a flood zone or not. I mean, that's mortgage 101. But we have to look and see what the flood insurance policy is. Flood insurance is also assumable. A lot of people don't realize that, but you can assume the flood policy from the seller. So it's still an application process, but you can essentially, Larry, correct me if I'm wrong here, you can essentially take over the rate of that insurance and assume that, very similar to assuming a VA or FHA mortgage. You can assume that policy as opposed to opening a new one. Sometimes it doesn't make a difference, but in many cases it does. So at step one, figuring out, does the property require, is it in a flood zone? Does it require insurance? Step two, can we get a copy of the seller's insurance policy with an accepted offer? We can see what the numbers are. And then step three, figure out if assuming it or getting your own policy is something that's going to be beneficial. But the regular home insurance has been more of an issue as it relates to the coastal properties. A lot of insurance companies are pulling out if it's within a certain distance of the coast. They won't insure there. Other companies are going in. So it's just making sure you're going to a company that has many providers that can offer coastal insurance.
James, is there ever a time, so you're talking about two different flood insurance policies for a
flood and then
flood zone.
Yeah.
So you got regular homeowners insurance, and then if you're in a flood zone, that one of these experts can help you find out if you are, you get flood insurance. Right. So there's, one question. I'm going to go to Larry. James, when is the time that a buyer does not have to get flood insurance if they're in a flood zone?
Never.
What about cash? What if they're putting cash?
Cash. Yeah, if they're getting a mortgage, they would have to. They're not. If you don't have a mortgage, you're not required to get any insurance, really. But if you're in a flood, but if you're getting a mortgage, if the property is in a flood zone, but if the flood zone itself is, if this is your property and the flood zone is in front of it, your actual the actual structure is not in the flood zone, it's not required. But if you have like a shed that's in the flood zone, you probably won't have to get insurance because it's just a shed or whatever it is. But if you're getting a mortgage and it's in a flood zone, you always have to get insurance.
Okay, interesting. And then it gets into that pieces. So now I'm going to go to Larry, because even though a person that's not getting a mortgage doesn't need flood insurance, I would think that we will advise them to get flood insurance. Larry, talk to us about that. And then Tia, I'm going to come to you after that to kind of wrap up on the residential housing side. Larry.
Yes. So correct. Anybody who wants to buy flood insurance can get it. Everybody's in a flood zone. That's for sure. Whether they're told they're in a flood zone or not, even in X zone, they're still in a flood zone. So for instance, these people in South Carolina, Charleston, they may not be in a flood zone before this rainstorm. They're in a flood zone afterwards. So you can buy flood at any time for sure. So if you're buying a home and the lender doesn't require it, we always advise at least take a look at it for sure. I mean, basics of insurance, you got to insure what you can't afford to lose, right? And do you want to have a $200,000 loss and want to self-insure it? That's okay. We're sensitive to that. However, we try to make sure that we recommend these are your exposures at hand, whether it be fire and or flood, and therefore here's flood quotes. So now the flood insurance, from a real macro basis, you can get private insurance or you can get federal insurance. Those are the two, right? And there's a lot of private insurance carriers that are out there thinking they can make a go of it, and the rates change from time to time. And then you get other carriers, well, the National Flood Insurance Program, and then you have resellers of that. So there's lots of different markets. There's a lot of different places you can go for flood insurance. And if you have any desire to do it, it doesn't have to be ocean, right? It can be a swelling pond or a creek or whatever, or it can just be, if you're afraid of major rainfalls, that can be a definition of flood as well.
Yeah, I would think there's many properties right around our areas right now that are getting flooded water in their basements and their yards, and they're not in flood zones. So to wrap up the flood insurance piece of it, if you're getting a mortgage, you need to get flood insurance. A team of experts can determine how much you need and why. If you're paying cash, you don't have to get flood insurance, but we recommend you do. And you can talk to your insurance advisor like Larry to find that out. So with the last 5 minutes, Tia, I'm going to move to you. And if you could share with our listeners what you'd like people to kind of come away from this program with, what are the things that you want to make sure they remember when it comes to insurance, whether it be insurance for flood, condos, and single family?
I think the biggest takeaway is make sure you have an expert representing you, whether you're a seller or a buyer, whether it's a single family or it's a condo or it's an investment or a multifamily. Have an expert. I hope that people have learned something today that maybe they didn't touch upon in the past, because I think we shared a lot of differences and nuances that have come into the marketplace. But I think the most vital takeaway is make sure you have an expert, because you, first time, will never know some of these things that we touch on all the time. And don't be afraid to question. I think that's the most important part. 3 things that we just touched on in the last 2 minutes here was, I did have a client that actually took over my seller's insurance. It was through Neptune, Larry, and he took over the flood insurance. Okay, that was number 1. I have 2 areas that I represent here in South Boston, and both buildings are a block away. One is on the map as flood insurance, and yet it's the same radius to the ocean, but the way the map did it, the other building is not. And it's knowledgeable for you to know that, so you can explain to people why Tom has to have it and Jenny doesn't have to have it. So again, we can always rely on our experts in insurance to look at the flood map if you don't know how to go into the flood map. But I think it's so vital that whether it's James or Larry's association or my association as part of Conway, knowledge is key here. It's the only way it's going to assist you to know how to best insure yourself. And I hope those are the takeaways for people today.
Yeah,
thank you, Carol.
Tia, that's fabulous. It takes a team of people that care and experts, and I think that's a great message. Thank you for that. James, what would you want to leave our listeners with?
I would say just don't be afraid of the numbers. The whole thing with any market, but the recent market, is it's expensive. The numbers are higher than normal. Don't be afraid of it. Just know your numbers inside and out. Understand what the options are. Figure it out earlier than later. Because if you get into a property that you love and realize it's out of your budget, that's a problem. So understanding your numbers inside and out is key to being successful in this market.
Really important. I love that. And don't be afraid. Ask questions. And that's excellent. And Larry, our insurance expert, what would you leave us with today?
Well, I want everyone to know we're all in this together. All of us are experiencing this whole insurance problem. I think communication is really big as far as a first home buyer. There are more than one option, and certainly do a lot of asking. There are credits available. There's things that you can do for sure to get additional options. If you're a person who already has insurance, time is on your side. If you get your notification and or just a renewal, ask questions, be transparent, call your current agent, call CCI at Walter Insurance, call anybody that you can get, and ask a lot of questions, because there are options.
Fabulous. This has been a great discussion. And, I wrote down a few words as I listened to you. Knowledge, ask lots of questions, surround yourself with a team of experts, know your numbers, and don't be afraid. Don't panic. Just understand by asking questions, communicate and understand that you have lots of options. So I think that's a wonderful place to leave our listeners. This has been an excellent conversation. I learned a lot listening to all three of you. I feel fortunate to work with such great experts and people who really care. And I really appreciate all of your time. And if anybody that's listening has questions for anyone, Tia, James, or Larry, reach out to us and we are happy to help you in any way. So thank you and have a wonderful day. Bye, everybody.
Thank you.
Thank you. Thank you. Good to see you.